Hi, this is Ron Tank. I want to talk to you a little bit today about the international Brexit news and why a system always trumps news when it comes to investing in the stock market. And recently we've seen the markets have, over the last few weeks, the markets have focused quite a bit on the UK voting to leave the European Union and the effect that had for a few days on the market. And since then, the markets have recovered. And I want to take a little bit of time today to show you how a great system always defeats news and will let you win in the stock market. Because really the secret to succeeding in today's stock market is the same as it's been for 100 years or 200 years. I've documented what I'm going to show you today occurring as long ago as the 1890s. So it's not new. But I want to share it with you a little bit today. And who am I? Well, I've been an individual investor for the past 21 years. And I walked away from a computer programmer job when I was 29 years old. I was out of college with a degree and had been working for a company for about almost 6 years at that time, and walked away to become an investor as a full-time career. And that is what I have done, is bought and sold and made the decisions on my own to buy and sell things in the stock market for the past 21 years. And with that said, I need to also let you know that I am not a registered investment advisor. I'm not a certified financial planner. I am not any financial licensed professional to give personal or to give any professional financial advice. I am not. I do not work for any Wall Street firm, never have. So that's my disclaimer. Anyway, just so you know who you're listening to. And today I want to, because of the Brexit and what you're seeing on your screen here, we know that in the stock market, fear and greed are probably two of the biggest motivating, driving, emotional factors out there. And when it comes to those things, you're probably, and we're all familiar with Warren Buffett, who's one of the all-time greats out there. And I want to share a few things that he has said. And also Sir John Templeton is another great that is no longer with us. And you can research him if you want to a little bit. A wonderful man who I would have loved to have met. And anyway, I want to share with you something that he said as well. And when it comes to prices in the stock market, we know that timing does matter, and being able to buy things and sell things at the right time can help someone do very well versus having mediocre or poor results. And that controlling or managing, or in my case, I like to look at it as annihilating risk is the goal, because really it's not knowledge that we seek, it's certainty. And I want to share something with you today. And Warren Buffett has said that there was a book called The Warren Buffett Way. And in that book, he said something similar, and I'm paraphrasing, that prices of stocks have a great relationship with the economic value of the business. And that over time, if the economic value of the business increases, that the stock price of that business will also increase. But he also noted that he's learned over the course of his career that stock prices can move above or below the business value based and more dependent on the emotions rather than economics. And so we know that fear and greed can have an effect on stock prices over time. And so what we also know about Warren Buffett is that he has said, when asked about how he makes decisions or how he does things when it comes to managing money in the stock market, is that one of his primary things that he likes to do is, and this is a quote, is we simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. And that sounds like that requires some timing and some skill, and I want to show you how I do it today. But Sir John Templeton has also said, and I'll quote John on this. This is a wonderful quote, and it'll kind of come right in there with Warren Buffett a little bit. John one time said, it is extremely difficult to go against the crowd, to buy when everyone else is selling or has sold, to buy when things look darkest, to buy when so many experts are telling you that stocks in general, or in this particular industry, or even in this particular company, are risky right now? And so with the Brexit news, I think that most people would consider that right now things appear risky. And appearance doesn't hold much value. And when it comes to investing in the stock market, having a system is of way more value. And so what I want to show you is something that I discovered about 10 years ago. And really, to be honest, I didn't discover it. I really believe God revealed it to me. And during a Bible study one evening, and I've spent years and thousands of hours proving and using and documenting the system and the basics of it. I'll show you right here in this video today. So with that said, I want to look at these charts. I will give you a little bit of groundkeeping rules here so you'll be able to watch these. It won't take very long, but I do want to point out what's going on here so you'll be able to follow me along a little bit. If you look up here in the top left part of the video, the NASDAQ composite. So this is the chart of the daily chart of the NASDAQ composite. So the price moves of the NASDAQ. And what you're seeing here is from about the end of January time frame, beginning over here on the left, and the chart of the NASDAQ composite since the end of January this year, 2016. And with this last day, with this green arrow underneath of it here being over here on the right side, being just yesterday. So it would be Friday, July 8th, 2006 is what you're looking at here. And for the most part, ignore most of this stuff. This is stuff that are not really relevant to this video. What is what you'll see in red is the Brexit news hits the market this day at the end of the day. After this day, next day the markets open down and trade down big, and for 2 days in a row on really big volume, which normally would mean a lot. And we had a 6.8% decline in the NASDAQ that occurred from the high of this day 2 days later to the low of this day. So 6.8% range in 2 days, with most of that being the actual decline for those 2 day trading days there. And so big, hard, nasty, ugly break. Brexit news all over the airwaves at that time. What is a person to do? And what I'm going to show you is that the Brexit, international scary Brexit news, was actually a perfect storm that created a great opportunity for anyone looking for it. And I'm going to show you how I look for it today. So this is the NASDAQ chart at the top. And just bear in mind that the red down arrow was the market the day after the Brexit news. And the chart at the bottom is individual stock charts. So these are all individual companies. Some you may have heard of, maybe some you haven't. And so that you will know what they are, I've included them down here, the name of the company, in this case Alibaba Group, and the stock symbol for that company as well. So you can go out and look it up for yourself if you like. And what I want you to notice in particular about these two charts, and I like to look at them in tandem because it lets you see the stock price movement along with the market index, stock market index, one being the NASDAQ composite, or you could be the S&P 500 would be one of the two I would focus in on. I'm using the NASDAQ composite. And what I like for you to look at is look at your bottom left, and this is what you'll notice throughout. These next 10 individual stock charts you'll see all will appear below the NASDAQ. And what you'll notice is from down in here on each chart that you'll see a prior uptrend. That's one of the things that I look for. And you'll see one here, and it looks very similar to what you see happening in the market in general as it's moving up here on the NASDAQ. And then as the NASDAQ runs into trouble, then you basically see the same thing occurring in Alibaba stock. And now the basic of what you're going to see, so that's it. And the scaling over here on the right is the price or the value of the NASDAQ composite. So 49.56.76 was the close of the NASDAQ on Friday. And this was 78.99 was the closing price of Alibaba on Friday. The numbers here are the value, the price of the stock, price of the index. The volume is at the bottom, so it shows you the number of shares traded. 14 million shares of Alibaba traded on Friday. and here you got $1.9 billion on the NASDAQ Composite on Friday. So that's the basics of the charts. And so what this system is about is the foundation is based on what I call, and it really is the foundation, is what I call a decision maker DNA. And what I discovered is a biblical truth that we were made to make decisions after we have experienced something 3 times. You've heard the old saying, the third time's a charm. Well, it's not really the charm, it's really a secret. Probably that not too many know that this is probably derived from the Bible. A lot of teachers believe in sharing things 3 times. That helps students learn. And the reason is you have been made to value something after a third occurrence. And I like to say that you come to understand, accept, and or believe what you've experienced. So in the stock market, what we find is, if you remember, we talked about fear and greed with Warren Buffett. He likes to buy only when people are fearful. How would you know when most people are fearful and have sold out of the stock market? Because if we really think about it, stock market's based on supply and demand. So once sellers have left the market, and there are very few sellers left, the price of a stock will go up much easier. So like Warren Buffett said, over time, the price of the stock can vary based more on emotions than the underlying value. So underlying economic value. And that occurs at times when people are scared, and it also occurs at times when people get greedy. So the fearful times are the times to enter, and this is a system that lets you see when most sellers have exited. Why? Because a downward decline in price has occurred 3 times. And after the third occurrence, there are very few sellers left, and the stock will switch directions and resume, keyword being resume, a prior move or prior uptrend, which is what you'll witness in these stocks. So notice February through April, that's the prior uptrend. And then you'll see as the market runs into fearful times or concerning times, that the stock will correct or decline 3 times. And you'll see that these can be shallower. Some stocks will decline less off their highs. BABA hasn't declined very much off its highs. Other ones will come off higher, and there's certain rules and guidelines you use to find the boundaries there. And I don't get into all that, but the basics are you'll see 3 distinct drops. And I've noted those on the chart by these gold lines that you'll see. Right there's one. Here's the first decline, second decline, third decline, and there's some rules to those as well. But just for this video's purpose, just look at the picture in general and look at what your eye sees. And the green arrow marks the day that it's safe to be in the stock and that you could now be buying. And so what you're going to see is 10 of these. I'll go through each one real quick so you can see them, and we'll take a quick look and just pay attention to what you see and how similar they are. And also note the timing that you'll see for the Brexit news up here at the top, occurring in that last 6 days of June, basically. And notice the timing on these charts at the bottom that you'll see with arrows. And the vast majority are all timed about the same. There's one that's you'll see a little earlier that'll occur maybe a week and a half or so before the market got its bottom, and these third declines occurred. And you'll see a few that happened just a little bit later, but the vast majority all happened on June 29th and 30th. And that coincided with the big rally recovery from the Brexit news. So watch these, and what you'll see is that you could have anticipated a market recovery right there after the Brexit news. So the first one we see here is Alibaba. So that's it. You've been looking at it for a while, a very shallow decline of three drops. I'm going to move on to the next one, which is Edward Life Sciences. So we'll bring it up, and it might take just a second. And there it is. So we've got Edward Life Sciences, and you see this again, the name in the middle. So always going to be the same right here. Name of the company, stock symbol underneath. Same mechanics. Gold lines here show the 3 declines and the correct day to be stepping into this position. And so there's Edward Life Sciences. Notice the prior move up, back here again. So all these guys, just notice what you're seeing. And again, I'm going to move on to that one. Maybe Edward, you're not too familiar. The next one you will be. And we'll pull him up here real quick. And this one is Facebook. So we've got a similar occurrence here of a third decline, and also the recovery with volume here after that bottom to tell you this one should as well be okay. So we'll move on, and here's another one we'll see is Masco Corp. And again, similar picture, guys. Notice this prior uptrend. Looks like a repeat, doesn't it? In this, not too hard, right? So there it is again. And then we're going to look at a few more as we go here. So here we go. Here's another one. This is PayPal. And again, you'll see right here in the center, name, stock symbol. Move up. Third decline. This one's just a little trickier, a little more difficult, but same principle. And again, the day here. Notice the timing again on this one. And we'll move on to another one. And again, we got U.S. Concrete, bigger move up. Same stepping pattern, same timing once again. And we'll keep on moving. And here we got Mobileye. May or may not be familiar with that one as well. And again, notice little different look. Timing right again. This one's a little bit earlier if you go up here. So it was on this day. We got a turn. Follow the rules, the rule apply. And this one's percentage-wise has obviously made a bigger move than most, but he started a little bit earlier too. And the Brexit news did not hurt him nearly as bad, is what you'll notice. Showing abnormal strength, and somebody picked up on that as the stock gapped up shortly after the Brexit news. So that would be Mobileye. And here we moved on to Goldman Sachs. Again, same concept, move up from the February lows, not as much. This one's a little different, and if you're familiar with charts, these are daily charts we're looking at, so daily price movements. I would recommend you take a look at Goldman Sachs on a weekly chart, and also maybe a line on close weekly chart. So if you're familiar with charts and doing that, look at Goldman Sachs and you will see, and these three drops that I refer to it as a triple tank. There's what I developed, what I call the triple tank system, and that's how I refer to them as the triple T. And that's what you see in Goldman here on this daily chart. But if you look at a weekly chart, you'll see that this triple tank you're looking at that occurred in late April through the end of June is actually leg 3, the third decline of a weekly triple tank that took 1 year to complete. And those are generally very significant. And this should be the very beginning of a recovery in Goldman from this point forward. So that's the Goldman. So that's a little bonus there. So look into your weekly chart, if you will. And we'll move on to the last two. And here we're on Macom Tech Solutions. And again, this one's a little bit longer. As you can see, if you start looking about here on over, this one started a little bit earlier than some at the beginning of April and took just a little more time, about 3 months. That's also a very good time period. And again, this one was just a little bit later, so we didn't get the actual turn day until going into July. But he's just not very far off the timing again. And we'll move on to the last one here, which is Palo Alto Networks. And you can see it looks not too different. This one also is, if you want to look this one up, so Palo Alto and do the symbol there, PANW, and look at a weekly chart, you will see again another very long time period triple tank with April, May, and June being the third and what should be the last decline in Palo Alto. So you'll see a bigger weekly, and you'll have to use a line on close there to see it on Palo Alto, and that's fairly common to practice to do. So anyway, that's the 10. And what you've seen there is the basics of how the triple tank system works. And it is the decision maker DNA in action in the stock market. And it has been since the beginning of time. And I know it has. I've went back over 100 years looking at it. And it was back there occurring the same way then as it is today. So anyway, I hope you found this video helpful. And if, like the decision maker DNA and a lot of the things I mentioned today, you can read a book out there that I recently published called The Moses of Wall Street, Investing the Right Way for the Right Reasons. It is out there, and I would recommend that you read it. It'll bring, you'll get more from this video, and if you read the book, I recommend once you read it, find this video again and watch this video again in light of what you have learned from the book. So take a few minutes. I appreciate your time today to watch this video. I hope it's added some value to you. I hope it's helped you to understand some things about the news and how the news can derail people. There may be some out there that are still trying to figure out how to handle this market. I saw it as an opportunity, and maybe you're seeing things a little differently now too. So just remember, a system always wins over news, and I hope you'll take what you've learned here today and hopefully you'll put it to some use. And I want to help you learn my bulletproof system for investing in the stock market. And to prove it, I'm offering you a free digital copy of my book, The Moses of Wall Street. You can go to www.rontank.com/free book. I hope you enjoy it, and God bless.